That's awesome, Darrell. And I'm just gonna hop on for a few minutes here, just in the beginning. Henry's got a lot of cool stuff to show you guys, and I'm kind of doing an intro on this because I feel like and I've told this story before, but when I first started out and I kind of was sitting there trying to set up computers and stuff like that, and I needed help. I'd called Geek Squad. They sent over Henry. He walked into my office, and I think at the time I actually had 17 monitors over the course of a couple of computers. And it was really fascinating because not only was he super helpful and he kind of helped me get everything together, but at one point he's like, if you don't mind me asking, what do you do for a living? He's like, I don't know if he thought I made adult movies or what was going on, but I was like, no, I trade and I do this kind of stuff. And over time, it's like, eventually kind of brought him on full time. And he started getting into trading. And what was interesting, and this is like 7 years ago, but he would sit there and watch me trade and then basically try to mimic that. And of course, at that point, I'd been doing that for a long time. So the risks I was willing to take and the stuff that I was doing, it's, when you're just starting out, can be a little kind of tough to comprehend. It's like, oh, I bought, 100 calls at $10 and now they're at $3, John, what do I do here? I'm like, well, you take the loss and move on. He's like, well, why would you get into that trade if it wasn't going to work? I'm like, well, it's called probabilities. And we kind of went through this whole process. And during this time, I would sit there and I'd kind of poke fun at more complicated option strategies. I'm like, oh, that guy's probably doing like a broken wing butterfly or a ratio spread. Oh my gosh. And I was kind of half joking because I would also do those, but I was really, really dialed into momentum and trading direction. And then there were times when the markets were like, like, okay, it's not doing here. Let's throw on a ratio spread. And it was interesting because for me, it was like a throwaway line. But for Henry, it was like, well, if John's focused on all this stuff, I'm going to really dive in and hone in on this kind of a thing. So what's been happening is kind of in the background over the last 4 or 5 years, he's really focused on the specific methodology that takes advantage of situations where having a multiple leg option strategy not only makes sense, not only kind of, really kills it in relation to what the market is doing, but completely encompasses what options were made for in the first place while generating pretty steady weekly income. So anyway, I just think that it's kind of fun. And I think most important is that if you've been trading for a while and you've been looking to up your game, so I kind of equate Henry to Steve Wozniak. He's kind of the engineer in the corner. He doesn't care about, being in the limelight or being anything like that. It's like he's in the corner working his ass off on trying to figure out strategies that work most consistently using more things above and beyond what I would just call, normal kind of a thing. So Henry's going to kind of dive into some of that stuff tonight. But I would encourage you just to kind of take a listen and just kind of see what he has to say. And from there, just kind of think of it in terms of like, okay, this guy spent 4 or 5 years doing this and dialing it in. Is this something that I should be doing as well? And so that's that. And so Henry, I'll turn this over to you. It's always a pleasure to kind of hear you kind of dive into the stuff that you've kind of been excited about and been researching. And happy to kind of sit back and kind of watch and take notes as well. So have fun, and here you go.
All right. Excellent. Thank you so much, JC. I appreciate you kind of running through a quick intro. And Dave, Mel, great to see you guys. Branch, man, a lot of good names in here. I appreciate you guys joining us this evening. We're running through a quick audio check, but as we stand now, you should have the introduction to Fading the Fear, a few of my favorite ways to profit from panic. As long as you can see that slide and hear, you're in good shape, and we can kind of get into I think hopefully a helpful discussion on some of the things that I've been working on. I would say for the past 4 or 5 years, these strategies have interested me. When you talk about when John and I began trading with each other, it's actually closer back to 11 or 12 years ago. I don't know where the time goes, but it sure does seem to fly. But I'll look at some of these with you, and I always kind of joke with people that if I have any purpose in life, next to hopefully being a good husband and a good dad to Lucy, it's to bridge the gap from things that I have learned from John and what a high-level trader had to offer, and where I stepped in from a little bit more of a technical background, not so much financial, and how I was able to make it successful for me. So going to share some of that with you this afternoon, and hopefully make good use of your time. Everything that we're doing with this hung is live, and I take, I just feel like if you're going to take your time to do this, I'm going to be right there with you. So everything we're doing is live. As I get into this evening's discussion, I will probably try to go with a train of thoughts because, I do have some things lined out that I like to share with you, and I try to keep with that flow. Once that is done, I'm happy to dive into any questions you may have or anything that may have not been addressed, but we are definitely live. Wasn't that a great compliment, the Wozniak of simpler trading? And I appreciate that because I feel like it takes both sides, and it's just kind of an interesting union of that. Oh man, that's so cool, Dave. And I'm glad to hear that. I remember doing that too, and kind of having all of the history behind it. It's cool that you can make an impact on that like that with people. But thank you for being here this evening. As we get into it, it's always good to start off with some goals, or say, okay, of this presentation, what are we looking to learn or kind of gain from it? And what I want you to take away from this is a reliable way to turn panic into profit. If you have struggled with this market, get ready to take some notes, because this strategy has produced a series of winners for me, and it's been really reliable. Now, I'm always one that's very careful to talk about streaks because I know how that type of thing can go. But the bottom line is that if you fully understand how to execute these trades, you can generate consistent gains without having to worry too much about the market direction. We're going to talk about some proven ways to fade market fear and enjoy some high probability income. It is possible to have zero stress, which is another thing that's, always kind of personal for people, how much really how tense you are around these situations. And I have taken the approach that you can do this without being a mental wreck, with about I'm calling it 86% accuracy. Now, it of course depends on the exact setup is what we get into, but I think you're going to see some, good accuracy with high probabilities, even in a tweet-driven type market. I have never really been much of a news guy because I like that time and price axis. I like thinking of the markets in a geometrical way and, kind of discarding the news. What John said about I'd rather watch Harry Potter than try and, dissect CNBC always stuck with me. And I've carried that forward. In this current environment, you can't argue that, these are things that are driving some pretty sharp moves, and you want to be prepared for that. You want to have something that can take advantage of it, and that's what I'm wanting to talk about with you guys this evening. So another feature of these trades that I think you'll really enjoy, especially if you have never done them, is that it's a certain spread structure where you can open with a credit and then close the trade for a better credit. We're usually used to doing one side or the other, but this actually offers both and can really open the door to some pretty awesome benefits. Thanks, Jim. It's good to see you this evening. Hope you're having a great Tuesday, and thanks for spending a little bit more time with me. But kind of continuing on with this, kind of a way of thinking and what I'm wanting to share with you. When I began trading options, I was always focused on long puts and long calls. This seemed like the easiest option, as it's what most brokerage houses allowed for in new accounts. And hey, it's what John was doing. Clearly, he's got something going right for him. And I want to try and pick up off of this way of thinking, kind of learn and master what he's doing. And it seems like a good place to start. So that's kind of where I began with my foundation. As time went on, I found that this method could be great, but it really caused a lot of volatility for a guy that was more accustomed to the swings of a $1 and $2 no-limit cash game. I thought a lot about the zero-sum aspects of options and trading, and just like in Texas Hold'em, if I was losing money, somebody else was on the other end, and they were making money. This is one of the things that I feel originally united John and I, is that I would be there, working on the network, getting things kind of squared away and up to speed. And just the topic of kind of like, hey, what else do you do other than fixed networks would come up. And I told him my passion for gambling. And I think he knew that this might make for an interesting union of things. And that's part of the background that I had heading into this. knowing that I was on the other side of someone else's winning trade and starting to really kind of think about these ideas and dwell on them a little bit, I started to think about how could I get on the other side of these trades? How could I make money on a stock going just about anywhere and perfect a consistent strategy? Maybe it would require me looking into some of those spreads that John used to make fun of. I would always think too that if I was going to be of any help in this company, clearly I didn't I didn't necessarily need to tell people how to trade directional options, right? John had a really solid foundation in that. He knew how to teach it, he knew how to do it, and he was very straightforward with that. So I would think, what if I could learn the slightly more advanced side of the spreads and things that are not so straight up? Well, then you would offer, some variety to the strategies that people could choose from and ultimately make myself a more well-rounded trader. So as I began this quest for variety, acknowledging that long calls and long puts have their place, but I knew that if I was going to be the best I could be, I would need to learn things like broken wing butterflies, iron condors, and anything else that might be thrown at me. I wanted to know what all of my options were, so to speak, like what all is out there, and how can I try to take the best advantage of these financial derivatives? Because you start to learn how things are more maybe 3 and even 4-dimensional as opposed to just long and short. This way of thinking led me down the path of grinding out some consistent winners with a variety of 3 high probability strategies. These strategies work best in a high volatility environment, but can still provide consistent returns in a choppy or trending market. They're especially great for traders looking to trade options near expiration and want to take advantage of the nuances that go along with it. As we get into some of this, a little bit of my background, I think will really help give you a foundation for how I think, how I operate, and how I've been able to take these more aggressive directional approaches and make them into something that can work for me. My dad was always a big influence on my life, and I feel, we all share this to some degree because it's what makes us who we are. And my dad would tell me as I was even as I was really small growing up, to work with your head and not with your hands. He made his way through life as a firefighter and a mechanic. So I grew up with a real appreciation for manual labor and turning wrenches. Needless to say, I couldn't really go do a lot of firefighting, but I was able to, a couple of these restoration projects as a kid. We worked on restoring a 63 Ford Galaxy, and that's the one you see there on the left. And then some of his recent projects that I feel like have turned out really well, they're on the right, a 43 Packard. And it's just, he always had, I think, the best of kind of that willing to put some manual labor into something to get it done, but then also the mind to complete these projects. And I learned a lot by, rewiring the dash of that car and things of that nature. I took this technical mindset in a way that, I think that you always kind of want your kids to grow up a little bit, maybe a little bit better, a little bit smarter than you were. So with his advice and taking the idea that I really need to take my brain and try to make good use of it, I embarked on this Geek Squad double agent thing. A couple of funny pictures there. One of me was a couple of years into the job. We got to take these cars home and kind of drive them wherever we wanted. At the time, they thought it was good marketing, and we definitely took advantage of that. I would also take pictures anytime I had a funny job, and you can see the one on the right where just a family of goats wanted to come say hi. But I progressed through life with this way of trying to have a good technology kind of and technical mindset, and being able to work well with that. Pursuing that and kind of pushing that every single day, one day landed me at John's house. The rest of this is a little bit of history. So as he spoke to, I wound up there, and we hit it off pretty friendly, I would say. We had a lot in common as far as risk tolerance and kind of thinking about probabilities and things of this nature. So after a certain amount of time, he just came up with the idea, like, why don't you just work here all the time instead of being here all the time that you're not working at Best Buy? And I thought, I'll never forget it, because I remember telling my dad, and he was like, I don't know, I think you've got a pretty good thing going with Best Buy. You might want to play it safe. But, it's the type of decision that you take home and you think about it overnight, and you just, in your heart, what the right answer is. So as it works out, I dropped the Geek Squad bug and moved over into working towards becoming a full-time options trader. Carolyn and Bruce, obviously John, have been some of my biggest mentors over the course of the past, now it's coming up on a full decade, and they've really had a huge impact on my life. And I feel so thankful to have grown up under very smart traders. Then knowing that this stuff works, all I need to do is find my method to it, the way that I can kind of tweak these ideas and strategies to do something that is right for me. So that's kind of how this life as an option trader has developed to this point. I've also got a couple other things in here. It's actually kind of ironic. Today happens to be the 7-month anniversary of me being wed. I didn't know that was something that was going to happen in my life. I always approach that from a more conservative standpoint. You can see a couple other you can see Bruce in the background, and then John's daughter, a few others. But it's been interesting because John is, having met him, changed a lot of things in my life. From Mandy, which I know a lot of you guys know, to being married, all the way into Life It's Simpler. So you can see some of our other chat room moderators there. Here again, Raghee, Eric, David, and Doc, all of whom I've learned so much from. Obviously, there's Danielle, Mandy, and Sarah, who were also quite helpful in putting this presentation together and really in everything that I do around here at Simpler. So it's been an interesting kind of whirlwind trip getting from where I was to where I am and working to incorporate that in my day-to-day life and working to make it successful. So this all takes me onto this kind of fateful day. And going back and reliving this was it was unique to document this, because this is where things really came through for me. And this is where I was telling you at the beginning of the session when John had mentioned, that what was it, like 7 or 8 years ago, whatever. Well, it's actually getting closer to 10. I know we feel like, we kind of share this, like, where did the time go? But I went back and actually documented the exact day that all of this took place. This was Friday, January the 8th of 2010. These are the original buy and sell orders that we're taking a screenshot from in John's TradeStation account. And you can see kind of the psychology behind this day and kind of a way that I think we all go through this to a certain degree. He had been letting me trade through his TradeStation account under a demo, and that had been fun. I'd been going through trading small lots and this and that, trying to get a good feel for things. And you can just see the mentality between I come in, it's a Friday morning, and I'm ready to make something happen. It's like, all right, doing all this small lot stuff is fun, but I want to make a trade that really matters. Let's just give something a shot and see what happens. I neglected the fact, and I think it's changed since then, but back when I had this login, if you would just type the name and login and hit enter, you would immediately go into live trading. Now, you had to manually go and click demo if that's what you wanted to do. Now, I think they have a secondary pop-up that is more clear. Do you want to do live or demo trading? And it kind of clears up that issue. Regardless, I came into this Friday morning, typed in the username and password, hit enter, and never really acknowledged the fact that I was in a live account. So I got through the morning, probably had some coffee, decided which stock I was going to pick. And at the time, IAG was hot, in my humble opinion, because I liked gold and I was looking at these miners. And, of course, with a kind of a humble stock trading account, I couldn't trade the Amazons of the world. So I was having to work on finding these $10, $20 stocks and trying to push them. So I thought, all right, let's just throw it all at IAG. It's a name that I've been trading in my personal account anyway, and thought it would be fun to look at. All right, well, that's where that order goes off there about 9:45 or so in the morning. And as the day progresses, you can see this action on a smaller time frame chart here. Here's the 1-minute chart right there about the same time. And you can see where the 61,000 shares purchased at the market had a pretty good effect, right? That peak took you up into 100,000. So that's kind of right there where we were executing that order this morning, paying no attention to a limit or, really any plan whatsoever. After that order is executed that morning, I go on about my business and doing a couple other things. I want to say I was setting up a home theater system at the time, something to kind of have for a remote monitor share, and also so we could watch Harry Potter throughout the day. And as I'm getting this set up, John comes over and he's like, I've got something that you need to look at. And, I've been at this job for, I want to say it was right around 6 months, give or take. I think I'd kind of worked on the side before it became official in January. But he was looking at it and he's like, that order that you were telling me that everything had gone so well in? He's like, that was real money. And I couldn't, having this Geek Squad background and getting paid a kind of a humble per hour type wage and thinking of what I just committed $1 million to the market was a little bit staggering for me. And it's been a lesson that has lasted because there's so many things that come from this understanding. One is, you placed a trade. Do you think I was worried about that? I didn't worry about it at all because I didn't know what was happening, which of course is different than what we're going to get into, but there is some psychological value to that way of thinking. All right, we progress on into the afternoon. We get into a little bit past the lunch hour where we've figured out what's happened and we scale out of the position around 1670. So, my very first real trade here in IAG ended up being good for somewhere around 34 grand. And it was a very sharp introduction for me into the world of trading, of knowing what was possible. I think at the time I didn't quite acknowledge all of the risk of it, but then also the psychology that it takes to manage a position like that. And it's always stuck with me. It's been 10 years now almost. And it's just, sometimes you feel like there's a quote from Paulo Coelho that talks about sometimes, beginner's luck is the universe wanting you to succeed. And I feel like that was so much a staple of what happened in this trade. It's also a good point to talk about, what happened in this move. As you can see, these 2 days of action, which are highlighted here in white, the first day was the day that we were in that trade and sold out a little bit more towards the afternoon. Then you get one more pop the next day. And ultimately, this trend continues lower. And I just think about this because if I was sitting here trying to play this market to the short side, and I said, all right, the bearish trend led me into this consolidation, it should continue to move lower. Well, then some kid throwing on a random order was the same thing that could drive all this movement that could have stopped you out. So it really helps to think about, what are you committing to the market? What is truly possible? And try to be patient and thoughtful no matter what happens. So, like I said, that was something that really stuck with me. It was quite fortunately an enjoyable experience, but it reminds you of all the things that can happen in the market, and of course also the vast opportunity that is also available inside of that. So I know, right? Should have held it overnight. I just think that's so funny to look back on. I think that John probably obviously did make the correct decision, and we probably need to be getting out of this. But this just, really helps drive that idea home, because you could be sitting here thinking you have a perfect setup, but then this completely random action is what's truly driving what's going on behind it. So keep that in mind as you embrace your trades, and especially as you consider the strategies that I'm about to get ready to share with you. But a very transformative moment in my life, to say the least. Getting down into a couple more technical concepts. What is volatility? I love looking at the pronunciation for that because it looks so foreign to me, but it does help you actually pronounce it should you not be familiar. Volatility is generally quoted as the rate at which a price of a security changes, increases, or decreases for a given set of returns. Volatility is measured by calculating the standard deviation of the annualized returns over a given period of time. It shows the range to which a price of a security may increase or decrease. I always like including these kind of textbook definitions just because they can be helpful, but truth be told, this last sentence really kind of covers everything that you need to think about. And I included the second description as well because I feel like it was very, it speaks to the way that options premiums trade. The tendency of a substance to evaporate at normal temperatures kind of reminded me of the premium in options that can evaporate under normal conditions. You see these things and they seem so sharp or so drastic, but truth be told, they're all part of normal temperatures or just your typical operating situations. You may also know the volatility as the CBOE VIX. This is one of the most common ways of measuring stock market volatility. When equities fall, the VIX moves higher, usually along with investor fear. There's a lot of different ways of looking at this. The VIX can be one of them. You also have the CNN. This is published on, I think it's on CNBC, the Fear and Greed Index. And this is it's a way of taking a group of thoughts and a way of thinking and then putting it to action in the market. And you're going to see some other really sharp examples of this as we move forward. But you can see that this was taken a couple of days ago where the Fear Index was now. It'll be a much more sharp reading when we get through some of this discussion. Once upon a time, this volatility was very frustrating for me. I didn't know how to take advantage of it, and I feel like I was always chasing the move. As a beginner to this, you're like, all right, things are clearly not bullish. It's falling apart. And this, of course, can be used in the inverse. But I usually found on my side where, things are kind of falling apart, and I didn't want to chase that move. Over time, I've learned to embrace these drops and take volatility like I knew an option trader should and say, this is opportunity. This is a place where I know if I can think of it in the right way, then I'm going to be able to take advantage of this situation as opposed to feeling like I just need to wait for the trend to resume. So taking advantage and really embracing that volatility was a big point that I just knew that I had to make that turning point along this cycle of emotions. Now, the one here with the market emojis I thought was so great just because the variety among them and I guess this is all iOS, right? The guys that created this. But I feel like all of them just do a really pretty much perfect job of explaining the emotion throughout every one of these situations. What I have been focusing on with these types of trades that we're going to be discussing are these inflection points, the point of maximum financial opportunity. And you can get this on the other end too. Now, of course, the point of my maximum financial risk is more where we're thinking of taking the bearish aspect of these, and these trades do work on both sides of the market, but more so just focusing on these turning points, recognizing them, and then putting strategies on that, really work well with them. So that is all part of what we're trying to focus on as we perfect our entries and exits among this emotional cycle. We're all trying to do basically the same thing with these entries and exits, and it can be one of the toughest things to learn, as you try to master being a trader, especially if you're prone to taking impulse trades. Like it doesn't quite fit my plan, but it feels so bad. Like I'm getting pushed so hard. I've got to short something, or, we've all had these conversations in our head, and we know those moments that can make these types of moves very tough. Or if you're watching price movement too closely, if you've come from the transition of, I haven't been able to watch the markets day in and day out, and now all of a sudden I have the ability to watch them on a 1-minute basis, that can actually be sometimes more of a curse than a blessing, and it's important to manage them both equally. Chasing is bad enough when you do it through futures and stocks, but it's worse with options. Premium expands, volatility rises, and option prices are going to be inflated. Generally speaking, this is the worst time to get short. Many market participants were reminded of that over the past week, but some were able to take advantage of it. This is a chart going into a little bit more detail about what we were looking at with the first instance of that Fear and Greed Index. If you go back and look at that slide, you'll see a spot here where at the time that this was taken, you can see that 1 week ago, extreme fear was dominating the market. Well, if we know that this screenshot was taken right here on this day, well, then where were we inside fear? We were right inside here where everybody was, you almost feel like it was the right thing to do to panic because it's what everybody's doing. But, this is a prime example of investor emotion and how most tend to panic at the perfectly wrong time. Here, where extreme fear dominated the market, if we can learn to control our emotions, there are high probability ways to trade these situations. Looking at a couple different products that we're going to be spending a lot of time kind of thinking through this thought process and working to trade. The VIX will also reflect these moves. You know, the VIX is usually a direct reflection of volatility and the fear in the markets. And, you know, sometimes, and one of the discrepancies that we're going to talk about is when these don't move together and how you can kind of pick up on a little bit of tails from that. But these can be excellent products for these types of strategies. Knowing the emotional cycles that are likely to take place in the market, combined with the internals and a little bit of technical analysis, we can begin looking at taking the other side of these trades. So instead of feeling like I have to panic and I've got to get short down here at the lows, and inevitably, you know, and I'm, you know, I don't know the crowd I'm speaking to exactly, but if you've had to participate through that over the last 7 days, then you know what it feels like to panic and, you know, get short something at the perfectly wrong time. Knowing that that's kind of what's unfolding, we can take a little bit more calm approach to it. And I love talking about these trades with you because the ones that we're going to be discussing are typically a very calm approach. You know what you're getting into, you know the situation that you're looking for, and this is kind of where you find yourself. I've always loved this meme anyway, but it's a perfect, you know, image of the market can be melting down, but depending on how you are positioned and what you're looking to do, it can actually offer you some of the most opportunity. So I felt like that was very fitting for what we were trying to do here with our options trading. All of these strategies that we're going to be discussing take advantage of several key themes. One of my favorites that you're going to see in these is you're putting cash to work in an extreme market environment and you're not having to chase to do it. Having grown up directionally, you know, things would either, and it was usually all to the downside when that fear starts to kick in, but having had a directional background, when that fear kicks in, I think, all right, I've got to buy puts, right? Because if it's going lower, and after that didn't work time and time again, I just knew that there was a way to step in and look at it on the other side of the markets. Chasing the lows was a hard lesson for me to learn, but once you have such a solid foundation on what doesn't work, you can start to think about what will work. If someone else is making money every time that I bought those puts at the lows, how could I look to reverse those odds and get a little bit more of an edge? I very cautiously began with the idea that if buying options wasn't giving me the desired results, why don't I look at taking the opposite side of that trade and selling options? Seems kind of straightforward enough. But the idea was always a little scary at first. You know, your brokerage house and all these guys, you know, you start off with just long options and that's kind of all they allow. So I didn't know exactly what could happen. But just like I came to that point in my life where I knew that you've got to embrace volatility if you really want to be good at this, the same thing applies, where if you can embrace the sale of options, this is going to open a whole new world of opportunity and the world where you don't have to be so perfectly right on direction. This opportunity stands out the most during declines like we recently saw in the diamonds. If you come back to this chart of DIA, this shows the clear decline that this market had been in, was going through, and also notes the investor sentiment right at the lows. So this is similar to what we discussed before, but it's noting that in these areas when things look so bad, and we know, and it wasn't just this indicator, you know, the put call ratio, there's a few other things that we'll be talking about that help us know when volatility is at least a little bit extended. We knew that that was the worst time to be, you know, trying to get short. And if we can enter the right strategy and the right product at the right time, we get a trifecta that can really create a high probability opportunity. This was a trade that I entered on the diamonds on May 29th. This was a sharp down day with this particular ETF closing at the lows. When entered correctly and positioned with the appropriate strikes, this trade will make money anywhere above the major retracement from the December lows, giving us no upside risk and plenty of room to work should the index continue to decline. So if you were to take this chart and compare it to the current moves that we've gone through, you can see that this was a little early, right? You know, I started putting it on when we were down here at the lows, but this did not mark the lows in the diamonds, right? We continued on down lower, but with the proper structure and the proper, you know, knowing what you're looking for in these situations, I had a break-even point that Thinkorswim is very helpful in plotting onto your charts, but you can see that horizontal that goes all the way across. This was my break-even point inside this major retracement. So I can look at this and say, as long as the diamonds will stay above this area down here at 236, this trade is going to make money. And it ended up being one of the more successful ratio spreads that I've studied throughout this period. So it's just, knowing where to structure them, knowing when to put those on, allowed this to actually trade against me a little bit, but still come out with some very nice returns. So that's one example that we're going to be looking at in the indexes. It's one of my favorite places to trade it because generally these index ETFs have good volume. Some of the stocks that we'll look at can sometimes be a little bit more personal, meaning you kind of want to do it as an individual. But if you come into it as a big group, it can be tougher. Things like the diamonds, the Qs, these index ETF products have enough liquidity that they can tolerate whatever you bring to them, and they tend to be a great place for this strategy. Another way that we can use this way of thinking is that when we're looking to take advantage of periods of volatility and wouldn't mind owning a particular stock. This also filters down into certain personality types. And I've had the privilege of talking with so many of you at our mentorships, in the trading chat room, and just through other personal conversations to note that, hey, holding shares is not a problem. That's something that so many people enjoy and are willing to work into and out of. If you're starting to trade with $2,000, well, then yeah, you probably need to, really just focus on your verticals and things of that nature to help establish the account. But once you get a little bit further along, you don't mind holding some shares if you need to, and you've got the account backing you to do that. That becomes incredibly helpful when thinking about successful ways to trade names like Etsy. I've chosen Etsy because Etsy was a tough stock to trade directional calls through, but it's been perfect for these ratio spreads. I feel like I like talking about these with you as traders and as people that I'm trying to pass on helpful information with, because it's just been my experience, right? I like, and maybe it's a personal flaw to get into a degree of like, man, I like Etsy. Like I just, in my head, I feel like we've got potential. I feel like we've got these squeeze signals. I want to be a buyer of it. But when you look at the way that, what is Etsy's personality? It's not something that you buy and just goes up. It kind of tests you. It trades a little bit sloppy here for a little while. And I think you get into that with a lot of these kind of one-off stocks. So throughout this most recent decline, I knew that coming down here into about 56, I felt like this was an area of value for the stock. I felt like after filling the gap from the previous earnings rally, this was a spot where it could start to perk up. We also had other squeezes that weren't shown on this chart, but it's knowing, all right, if this name is not really good for directional calls, what can I do with it to make money and still be involved? Constructing a ratio spread is a more conservative approach than the outright sale of puts. It has a higher probability of making money than directional calls. So this lands me kind of right in that happy medium that I've been searching for. Buying the calls are just getting chopped up and decaying. Selling naked puts involves a pretty fair amount of risk. By using the ratio spread, I really get kind of a perfect mix of those two ways of looking at it. We work to enter these trades when the stock is down. The Etsy entry was on May 10th, and by taking advantage of the fear in the market at that time, it gives us a little bit more edge on the entry and more time to see it come through by using the correct strategy. So, that's just a brief little risk profile graph. You can kind of see the basic idea of this. But as you progress with this idea further, the idea of taking the right spread at the right time will give you more breathing room in the trade. In the case of Etsy, our spread would have made money all the way down to the 200-day simple moving average. So you take these trades and you try to construct them in a way where you're using high probability options anyway, saying, the structure of this has a good chance of making money. And then you're lining those break-even points up, just like we did with the diamonds. Now, this one is slightly different, but it's the same things that we're going to be covering and the key concepts that have been so helpful in mastering this strategy. You take a visual example of the risk profile graph and put it onto a chart. So like we were looking at before, you can see where off of that type of a point value where your maximum profit will be achieved. When you take that and put it onto a chart, you can see that we constructed our spread in Etsy with technical levels in mind. Our maximum profit is realized at $55. You can see there that the 200-day moving average is at 55.63. So it's pretty much that perfect area where if we did come all the way down there, that should offer support. And mind you, this always looks so easy in hindsight, but this is a trade that was, entered on the date that I gave you and then just closed out several sessions ago for that full profit. But I just want to point out that, yeah, it looks so easy when it's trading back up in here, and it was nice to have the no upside risk. When it's trading down here below the 8 and the 21 and, really does have the chance of coming back down into here, you want to be able to tolerate that move or see the stock continue to sell off and enjoy it and know that that's basically what you're looking for. If you're a little bit off and instead it rallies, you have no risk to the upside, and that is still beneficial. But we're still going to make money if this stock falls all the way to 55. And this is really the risk profile that I've been working on the most to make these choppy trades beneficial and to morph situations where directional calls would have just been beating me up and taking it into something that is consistently printing money. Etsy was one good example of that. And then a sector that has shown great relative strength here lately holds many names that I wouldn't mind being assigned on. This is the computer software and services sector. This includes names like Zscaler, ZS, and this made for a no heat, in and out overnight trade, executing both sides for a credit. This is another concept that, depending on how far along you are in your options execution and the studying of spreads, you never really think of, like you always think, all right, if I buy it for a debit, then I want to sell it for a higher credit. But one strategy that isn't discussed too often is how you can open a spread, add a credit, and then flip it on the opposing side for a better credit. It's really the best of both worlds for reasons that we'll discuss. My way of thinking in ZS is that this name has been in focus since its last earnings report, and since I was willing to hold a small amount of shares if the report didn't go well, the ratio spread is the perfect high probability strategy. There's a real potential to make money in 4 of the 5 ways a stock could move. This is something that he covers it in most of his webinars, and maybe to a slightly different degree, but you think about how, and especially, like just let's say in this case for earnings, you can see the little right there is where earnings came through. But on a report, you can have the underlying move, much higher, a little bit higher, pretty much neutral and flat, down a bit, or way down. And what I have been trying to perfect is something where all inside these areas, every single one of them would be profitable. And it's worked well for this strategy. So ZS was a great example of that. We've also had a trade that we discussed here. Some of these strategies have been coming up in the chat room, and people will kind of get into the conversation with me. And it's like, all right, what's going on here? Can we do something similar? MDB has been showing excellent relative strength and a great sector, and actually offered better credits on both sides of the transaction because the stock sold off after a great earnings report. So the caption on this one notes that MDB earnings gave us no heat using the exact same strategy. We have no risk to the upside. And as price falls after the report, our in-the-money option quickly gains value. The short strike is never tested, making for an easy 2-day trade around a volatile point in this stock's life. So same thing here with the annotations, and to glance over these doesn't necessarily do them credit, but you can see the intricacies inside of it. So here on Thinkorswim, we can see the day where earnings was noted. We construct this trade in a way where we want to see it stay above 130, kind of just a general area that we thought price would hold. And you can see how after the report, same thing, where if it explodes higher, we have no risk in that direction. But the way that it traded down here into about 136 or so was actually directly beneficial for it. So once you have both sides that can make you a little bit of money, it really opens up a whole new way of trading these situations. If you'd prefer to look at this on the sell side of the market, Now say you want to, or bearish rather, because in each situation, we are always focused on initiating these trades for a credit. But if you would like to do it to the sell side instead of the buy side, these strategies are flexible and can be adjusted for traders looking to take on less risk. But whatever method is appropriate for you, there is money to be made in these situations. So like we're looking at with ZS and MDB, EA is just the opposite. In this case, we structured our earnings trade, and same thing here with these slides can hopefully offer a good amount of detail, but the discussion is also, kind of helps clear things up. Here you can see we were heading into earnings, which was our primary focus on this trade. I love focusing on psychological price points. They won't always be perfect, but in my mind, I was thinking, I like EA for a trade that can do excellent up into 100 and has no downside risks should it just fall. This move was perfect for that because we trade right up into 100, roll back over the next 3 or 4 sessions, and it gives you that same opportunity. Open your trades for a credit, close them for a credit, and do it in a way that's, relatively no stress. And it just, it can work on both sides of the market. And then most of these, and I hesitate to say that most of them are structured around earnings. There happens to be a number of these examples that I have used that did revolve around earnings. I don't usually suggest that. I actually prefer these strategies doing, avoiding earnings and doing them something like, maybe 30 days out and covering them 15 days, or even 45 and covering them 20. They're extremely flexible. The reason why I use so many of these from earning situations is because, one, we're not afraid to take assignment of the stock, and that's beneficial in a lot of ways. And two, because earning situations are very binary. They allow me to show you the in and out from beginning to exit all over the course of 2 days. Once you understand that in a very quick binary way, well, then structuring them out a little bit further is no problem. We just acknowledge the fact that it's going to take a little bit longer for the trades to come to fruition. But a very valid, and that's a perfectly good question, Kay. You guys should be seeing the unbalanced butterfly, where we're going to take this idea and morph it just a little bit different. Everything we've been discussing so far, and what I'm so excited to share with you in this discussion when we really get into it, is the way that if you understand the foundation of it, it can morph into so many other things so easily, and you can really make the best of these trades very granular, getting to see exactly the type of risk that you're looking for and comfortable with, and I think set up some very high probability situations. So taking this and looking at a few more examples, in the case of the Qs, this was another good place to look at this strategy because everything had just been falling apart for the past several weeks. And if you're not wanting to do it and say you have no interest in taking assignment of an underlying, well then, this is the perfect place to step into. So as we look at it with the Qs, we were sinking to new lows, and it would have been all too easy to give into emotion and just short something while the indexes were falling apart. Truth be told, I have these emotions too, where you can see it, and it's like, man, it is getting kind of rough out there. But knowing that I've got a plan and a strategy that can take advantage of it, I don't feel like I have to, you stop doing what you did in the past in favor of a more favorable strategy. So knowing what I know now about the market internals and several other technical factors, we know that this decline was a better time to be selling volatility. We begin scaling into these Q flies. Those of you in the chat room got these trades. And as the ETF drops to 175, it meets up with support, and that's where we take the rest of these positions. All right, that takes us into the weekend. And then Monday hits. You guys will remember the Monday where fresh tariffs on Mexico send the NASDAQ tumbling more than 2%. But because we enter these with defined risk, they're easy to hold. And you know that you're going to see this trade through because there's no reason to exit it. And you're using a strategy that does have a high probability of working out if you can see it through. So we take this time, knowing we're down a little bit on this, but seeing it through. And 3 days later, the rebound works perfectly for these spreads, offering an opportunity to exit, taking in the credit received. Later that week, the other half of the positions expired worthless, which is what you want when you're initiating trades for a credit. This is how you get yourself into high probability lottery tickets. There's a good chance that you're going to make some money. And then there's a chance that you get into winning more of a lotto results type pin. And when those butterflies can really come through for you, like that one in the diamonds did, you can make some really nice returns on a relatively small amount of risk. In this case, it just explodes higher. And the thing that I love about it is that if you're trying to structure it with just about anything else other than long calls, which can be tough to time, but there's a lot of times risk in both directions. In the case of the rebound of the Qs here, I don't mind. It can go as high as it wants because there is no risk in that direction. Provided I can define my risk properly on the downside, then all of this movement back up higher is a gift. And then I will be showing the actual performance for using these strategies. And then how well did they trade over the last 3 months of the year? They have been one of my most consistent strategies, Bob. It's not going to be something like I grew up on and still love in the right situations, right? If you can buy a call option at $4 and sell it at 10, that's great. That is not this type of trade. This is a little bit slower, a little more steady, but a little more consistent. And in the course, I'm going to show you every one of these that I've been tracking and working to really perfect my entries and exits and why each strategy was chosen over another. One of the most important takeaways that you can have from this is that with these setups, you have the ability to be right, which I'm quoting being right, is making money on your trade while still being considerably off on your timing. No different than what I showed you with those diamonds, right? I scaled in and I felt like I had pretty much my full position right here in this area. Well, then that big drop that you saw on Monday, you'd like if you'd bought long calls, you're kind of toast. But with these strategies in such a tweet-driven environment, I'm able to hold through it. And then as we resolve back up into the upside here, really works out about as perfectly as I could have asked for. And, initiating at the right time is the whole key to making them successful. And then another key theme of these strategies includes the fact that some options have a little more juice on one end. Puts and calls are not always going to be evenly priced. If there's a bit of euphoria in the market, this skew could be towards the calls. If we're in panic mode, and kind of the general market consensus generally is that skew will be seen more to the downside, or you'll see the out of the money puts stand out a little bit more. When we look at this in a options chain, we're still seeing a slight skew towards the out of the money puts. With 11 days of life left, the Delta 18 put in the diamonds is trading for 74 cents, while the Delta 20 call is trading for 64 cents. These are the things that you're going to be looking for in these setups to say, these might be a little bit juicy because of that extra premium that's on them. You won't see that downside skew in every situation. Let's take the example of gold, where if we go out a little bit further to get some meaningful prices in this particular ETF, this shows us where the July expiration with 39 days of life shows that the same out of the money directional exposure is going to cost you $14 more. So in these things, you can see where I've highlighted what's most important: the market price of the option, the delta, and then going across to show you where that Delta 20 lands. If I didn't have a perfect Delta 20, Delta 25, something like that is acceptable. But in this case, you can, because what has gold done here recently? Gold's had a pretty meaningful rally, so these out of the money calls show a little bit more juice. Acknowledging that skew is one of the foundational steps that we're taking advantage of to structure these trades. If we go back to the indexes to look at one more example, even after the Qs have rallied 9%, out of the money puts with 39 days until expiration show a 50% premium, or a $50 premium to the same out of the money strike. So see how we're taking that same concept, and here in the Qs, the out of the money Delta 20 call is going to cost you about $1. And then if you look at the same directional exposure in the puts, look how those are trading for $1.56. those are quite a bit more expensive. And that's what you're seeing, and how, the stuff that I talked about where I had to learn things the hard way. Buying these options is generally not, not going to result in the results that you want, because you're just paying too much for them. You can look at this in a couple ways. One way to suggest that the markets are going to the downside, and you're going to have to pay up if you want to participate in that. The other argument would be that fear is overpriced, and over a given amount of time, emotion and the pricing will revert back to the mean as the emotional cycle continues. I like to approach these strategies kind of a little bit of a mix of both, suggesting that the fear is overpriced, and then execute on that idea when I have a technical edge. Anything from Fibonacci clusters and timing to voodoo lines and simple moving averages can be considered a technical edge and help to create the primary levels that I'm focused on when constructing these spreads. It would be pretty difficult to show you how all of this works and the amount of time that we've had tonight, but you can see the tip of the iceberg. And if you like what I've shared so far, you're going to love the strategies that we get into on Saturday. It's really everything I've learned about these situations. How can you be in a volatile market, structure yourself in a way where you can still sleep at night and have these, highly structured, well thought out spreads? So, as we get into it, the class portion of it, we've been doing this as we typically do, where there will be a course portion of it. And if that's what you like to learn and participate in, that's great. Then we're also going to take that into a live 2-day trading event. And it's where I take the most pride in, to be honest with you, of course, the course too. But in this live trading, we're going to take time to dive into everything that I'm going through on a daily basis. Who knows what the market is going to bring on these days of trading, which is why it's the perfect opportunity to see them in a live environment and say, all right, this is what you have. How can you make money in these situations? And I have every intent of showing you the best of that. The 3 strategies, if you really want to drill down into it and know what you're going to learn over the course of this discussion, it starts with ratio spreads. This is the highest probability of success trade. It also is going to require the largest amount of capital. So, take this and think about, which of these traders am I? And I feel like I can help you get a strategy that will fit whatever you're trying to do. We can take those ratio spreads and then bring them into unbalanced butterflies. This is where we were discussing those high probability lottery tickets. These are going to take the least amount of capital to establish and also have the least amount of risk. And then we'll be stepping into the unbalanced broken wing. Remember too, and I kind of laugh at myself a little bit with this, and of course when I'm talking to any other trader, I know what John meant when he was saying this. Like, I don't like all the esoteric naming, but remember that all we're doing is trying to use a type of slang or a way of speaking to each other that is a shortcut to a pattern. It's just like if you're using a constellation to describe a group of stars. Once you understand this terminology, then I can tell you, hey, go throw on a unbalanced butterfly on this for earnings, or go structure this with the Delta 20 puts, and you're going to know exactly what I'm talking about. So don't let that terminology, shy you away from wanting to learn this. It's part of what's required if you really want to be the best options trader you can. And those are 3, I think, awesome strategies around it. Another part of this that I really feel I should spend some time on, I don't want to be brief in all of this, but this class is not going to be just setups and volatility. I'll never forget, I was not to sound weird, but I was sitting in the back of a cab with John one time. I think we were in New York. We were sharing a conversation with another trader, and he was just saying how, everybody in their infancy or in the beginning wants to know about the setup. Like, what's your favorite setup? And you can tell that that's usually kind of a beginner question. As you get more mature with this, you want to start learning things like, what are some mental secrets that I can use to really take these strategies and put them to good work? And I'm excited to share that with you. Tuning your brain waves to really get yourself in the right state of mind to make the best possible execution. You've also seen that recent article from Ray Dalio talking about how meditation can be one of the most significant and meaningful things in a person's life. And I'm going to share with you how this has impacted me. these are not, they're things that have been medically proven to help, create more of a kind of a, just more of a physiological approach where you can stay calm and execute the plan as you're supposed to. So I am going to spend a lot of time on the technicals and how do you structure these spreads? What strikes am I selling? What's the entry and exit? I want you to know the 3 primary targets that are going to come with all of these, but there's also going to be some psychological aspects to it because I enjoy that. And all I'm trying to do, like we mentioned at the beginning of this, is take the things that I had to learn the hard way and distill them down into something that can be a shortcut for you. You don't have to do it all, but I think if you'll take it into consideration and see how it's impacted my life and my trading, I think you'll find it incredibly helpful. So these are some of the primary things that I'm going to be focusing on with this course. If you feel like that interests you and you'd like to spend a little bit more time learning all of the things that I've taken so long to learn, I'm going to try to distill this down into a focused, really kind of, this is what we're going to be doing. This is what you will learn. And I think it will help shorten your learning curve. So another thing, and I've kind of already said this, but I just wanted to be clear that the tools that I'm going to be using in this are all things that most of us are familiar with. Now, if you're completely new to Simpler and trying to get a foundation, well, then you may not know the voodoo lines. But if you've been here for any length of time, these are all pretty static, pretty common, and they're tools that we're all familiar with. So you're going to be taking things that you've been seeing day in and day out in the chat room, and then we're going to modify that to using spreads that also have a very high probability of success. I think these can be great for earnings. They can be great for witching expirations, which we're coming right up on. And they can also be great for longer duration swing trades, whatever fits your personality. Excellent. Well, thank you for your question, and I hope you found that the broadcast was helpful.
All right, Henry, thank you very much. I just want to kind of dive in here for just a few minutes. And first of all, it was a great presentation. And I think for those of you that, that really have not gotten to hear Henry before, you kind of know a little bit about what makes him tick, his background. And, if there's anything there from when I first met him at Geek Squad to learning about his background and putting together cars, is that Henry is just a very, very thorough and precise person, and the way he thinks through things is very thorough and precise. And his nature is to kind of work on something for months and even years and get it to the point where he feels it's perfected, and then say, hey, have you seen it? Have you seen this? Have you ever thought of doing this? And to me, it's always pretty great. And it also answers the question where he became, at some point while he was doing this, when his dad was talking to him about leaving Geek Squad, it's like, I don't know if that's really a good idea. You've got something that's consistent here. And that's always stuck with him, is that if you're going to do something, you want to make sure that there's some consistency there. And so, yes, he did take the leap and he came over to Simpler, but for his trading, it's always been like, well, I really just want to focus on consistency. And at first he would just kind of like, all right, I'm going to buy some calls and I'm going to buy some puts. And sometimes they would work, and frankly, sometimes they wouldn't. And that didn't answer his question of consistency. And so over time, he did a combination of things using different option strategies that focused on selling premium to continually increase that consistency. So I thought one of the coolest things that he showed me was situations where statistically, okay, if you guys are familiar with standard deviations and all that, there's some trades where statistically there's an 86% chance of success. Well, he found a way to actually tweak that and up that 86% chance of success closer to 95%. With just a few little tweaks, you can increase that statistical probability even more in your favor. He will occasionally, especially on a day trading type of a situation or on a lower volatile ETF like the Qs, look at some strategies that are, I call it like this, NOW. Now, that means naked one way. So you have some directional exposure to the upside, for example, if you choose to go to the upside on an index, but if you're looking at that and you're just like, okay, great, if I can go naked one way, and look at that as an opportunity to really exploit this premium if the conditions are right. Okay, and that's a really key part of this, is that you've got to know when the conditions are right to do this. That's the only way. You can take any strategy on the book, whether it's buying a call or selling a spread or whatever it is. You can understand what the strategy is, but if you don't know when to apply it, okay, it's not going to work for you. So it's understanding exactly when to apply that. But at the same time, it's also being able to look at it and say, okay, I don't necessarily want to take naked one-way risk now. Here's a few tweaks to make it contained risk, right? So it's nice because you can kind of look at it both ways and have a specific set of criteria and rules to decide which way is the best way for that particular situation, for that particular moment in time, okay? Another thing that I think is really cool is Henry's going to teach you how to find and structure trades that you're taking a credit to open the trade, okay? And then you're taking a bigger credit to close it. So that's something that's, and basically if you think of it that way, it's like, okay, you put on the trade, you get $100 in the bank. And then you take out the trade, you get another $500. So you start off with a credit and you end with a bigger credit. Usually it's completely the opposite. Okay, you start off with a debit, and then you try to turn that into more money, or you sell a credit and then you try to buy it back cheaper. This is, you start off with money and you end up with more money. You start, in terms of a credit. And so it's just, again, it's a concept that not a lot of people aren't even aware of, and so I think that part is great. So overall, the strategy is really great for high volatility, which is the kind of market we're in right now. It's obviously great for selling premium, which is ideal for the kind of market that we're in right now as well. Also, too, what's nice is that when you have days where the market's really, really puking, and people are panicking, you can actually set some very easy trades up in this situation that allow you to sleep at night and to take advantage of that volatility. Okay, what's great about that is you don't even have to pick a direction. You're just playing on fear. And again, you need to know what to look like here. It's like, okay, I need to know specifically when that makes sense. Okay, great. Here's a checklist. When this happens, and this happens. This is the kind of trade that you're going to do. Okay. Now, the nice thing about this too is you can do short time frames, long time frames. I know there's a lot of folks like to do active trading, especially around every Thursday, Friday options expiration. There's a lot of fantastic shorter term strategies that you can do around this that last a day or overnight. All right. You can also, though, stretch them out to weeks to take advantage of that as well. And then Henry again will show you exactly which setups to use on which time frame. And the other thing is you guys know, is I'm a big fan of the squeeze, right? I'm always looking for a squeeze, Well, 80% of the time, okay, there is no squeeze. So what do you do during that time to make some money? And so this is a way to generate consistent income in that 80% of the time that stocks aren't even in a squeeze, which is pretty amazing. And also, this is a basically zero stress, unemotional, cash flow type system where you automatically avoid chasing moves and you automatically avoid those impulsive mistakes. So if you look at this, you're going to notice that there's three different tiers here. So Henry is going to be doing the basic strategy. This is going to be coming up on Saturday, June 22nd. You may have seen this originally on the 14th. It's just bumped up to the 22nd here to take advantage of some different expirations that are coming up. And with this, you'll get the strategy class and how to do all this stuff. And most importantly, it's when. Okay, it's like, hey, here's the strategies, but more importantly, here's the checklist, and here is when you do them. And then if you're newer to options, there is this video that Henry and I did together, Options 101, and it'll get you up to speed. The one I always like to do is the Pro, because you'll also get, in this case, 2 days of live trading where you can see this put to practice. Now, one of the tools that Henry likes to utilize is called the Voodoo Lines, and you'll notice here that that's in the Elite package. If you already have the Voodoo Lines, you already know how awesome they are. I'll show you a quick look at what they look like here. All right, so what are Voodoo Lines? Now, the Voodoo Lines are great. You do not need them for this class. If you've got them, though, Henry will show some setups where he utilizes them, and then, of course, they really are amazing. So if you are interested in them, this is a really quick few minutes on what they are. So the Voodoo Lines, unlike pivots, are here all the time, okay? They do not move. Now, basically, there's 4 main levels, and 2 of them you're not going to see on this one, but you will. So there's red, which is the strongest. green, which is the second strongest, white, which is the third strongest, and then blue is kind of a pausing point. And what you're going to see here, so this is a daily chart of the S&Ps. Now, whether you're looking at a 5-minute chart or a daily chart, they're the same. Okay, and you're going to notice here, oftentimes, we come up to what we call this is the snow line. It'll pull back to one of the blue lines to the penny, come back up to the snow line, and then it comes back to the next blue line here, and then finally it's able to go, and guess what? It'll pause along the way to the next snow line. Oh, let's come back and test it. Oh, test the blues. Boom. This happens over and over and over again, and so you can kind of plan a lot of really cool moves with this. Now, what's nice about this is that this does move with, okay, you want to look at a stock? Great. Now, remember I talked about red and green. Here's Facebook. Again, these levels have been here for a year. They don't change. But look how lockstep this is keeping the stock in place. And then this is the big daddy. Like, you don't get through that one. Boom, rejection, all the way back to the green line. Okay, and you can see how we're going back and forth there. And, it works things like on crude oil, too. So whatever you like to trade, voodoo lines are amazing. Same thing here. You can say, wow, red, 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 red. When it finally gets through, boom, snow line, snow line, snow line, comes back down to red. Tight, 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 and then, et cetera, and it stair steps down. And again, the most amazing things about these is they do not change, all right? You can plan in advance. All right, so that is what this is. So if you're wondering what the voodoo lines were, that's what this is. This is one of those things where, again, if you have them, great, they'll be utilized. If you don't worry about it. It's just one of those key elements that Henry likes to look at, but there's a whole bunch of other stuff as well. If you've never heard of them and you thought, wow, that actually looks pretty amazing, this is a way to get them at a discount. On our site, you can get the voodoo lines by themselves for $997. Here, you can see that this, for $13.97, basically you include the Pro live trading as well as the basic, so it's kind of a nice package deal there. So anyway, if you're looking at this and going, well, it sounds intriguing, I don't really know what to do, just do the basic, because that will allow you to kind of come in and see the strategy. However, keep in mind that you can save up to $100 off with the early bird pricing, and this early bird pricing will end when the class starts on the 22nd. Okay, so if you're looking at this and going, well, I actually think I like that live trading, great. You can get it for $5.97 now instead of $6.97 then, et cetera, et cetera. So that's what I got. This is going to be, so, one question people ask is like, well, why should I take this class? How is this different from other stuff? And really the main thing for this is, consistency. Henry's been doing this. He's had 17 winning trades in a row now since he started tracking it for this specific class. So I was like, oh, well, can you show me what a losing trade looks like? He's like, I will, but I haven't had one yet. So, again, he's really dialed in to how this works and how it can work consistently. And then from there, it's one of those things that it's like, at first blush, it's kind of easy to do, but if you don't know all the situations in which to apply it, okay, it's just not going to work. So part of this is like, hey, here's a strategy, and there's 3 different ways to do it, but here are the specific circumstances where I've found that it works the best. So that's what that is. It's going to be a great class. I always look forward to stuff like this because I know the people that take it. I know the impact that it's going to have on their trading, and I think that for me that's always exciting just to kind of see. All right. So again, simplertrading.com/pocket. That'll bring you to this page. You can choose your adventure, and we'll get going with this on Saturday, June 22nd. All right. You guys have a good one, and hope to see you there at the class.